Thanks for joining this rental property analysis video. In this video, we'll talk about how we can analyze a rental property based on purchase price, closing cost, different types of maintenance fee, mortgage rate, and finally calculate our cash flow. This video might be overwhelming for the first timer, but you can always pause and think or come back to this video later multiple times to get familiar with the item. We will analyze the property located in Cleveland, Ohio market. We already own multiple rental properties in that area, so it's a little bit easier for us, but you can always get started with your familiar area first and then start analyzing new area as you get to know the terms and also what to look for. Now let's get started. The property address is 4214 West 42nd Street, Cleveland, Ohio. So what I did actually in Google, I will just search with the address. You will get a lot of links, and we will use few of the links to get started. So we already got a Google Maps link. Then the second one is the apartments.com. We can see there is a Zillow, Trulia, Redfin, and also realtor.com. So we will use multiple sites to analyze multiple items for this rental property. So let's go to the apartments.com. So, and these are the Redfin link. You can see currently this property is pending and the listed price is $79,900. And you can go through some of the description to get an idea actually what is the condition of the property and if there is a multiple picture. Seems like there is no picture for this property. You can get familiar with the Google map. So if you click here and then go to the street view, it will give you a better idea what type of neighborhood you are looking for. So these are something like C plus or C minus type of neighborhood. So it will not be as good as for owner occupancy neighborhood, but seems like it's a decent neighborhood. And you can go to Zillow to get some idea about the current price guesstimate or actually the rental guesstimate. So seems like the Zillow is guesstimating the price is actually 78,000. You can go to Trulia, which gives you the crime variation of this neighborhood. So if you want to actually click this crime tab, it will open up a pop-up window. So it can show you actually if the area is more blue, that means actually there's more crime prone. So our property is located something like here. So it's like little bit related to crime prone area. One thing I also do actually whenever I analyze the property, I always go to the county website to figure out actually. So this is the property. It's located in Cuyahoga County. So you can always go to there and then actually look for this address. So let's get the address of the property. So this county website actually will gives you the tax information, current owner information, and also when it was the last time actually it was sold. So if you click the viewer paid tax bill, it will give you the information about the current due of the tax. So I always want to check if there is any existing tax bill due. You can take a look at the transfer. That means how the ownership has been changed. So the last time it was sold in 2016 and the purchase price sale amount was $50,000. And this is the current owner. And if you want to know the current bill, tax bill, you can click this tax bill. It will show you actually what is the current amount for the tax. That is current charge is actually $1,976. So I normally use BiggerPockets.com. They have a calculator built in, which will actually gives you analyze a rental property very easily. So if you go to the BiggerPockets and go to the tools section and rental property, you need to create an account. So you can create a free account here. So to analyze the property, we will just get started with the address. So we already know the address, 4214 West 42nd Street. This is in Cleveland. The state is Ohio. And the zip code is, you can take a look at the zip code here also from the address, 44109. I also downloaded a picture from Zillow and then actually uploaded in the BiggerPockets calculator, this calculation section. So you uploaded the picture. So now we will go through the purchase information. So what will be the purchase price? So if we get this property with this mentioned listing price, the 79,900, we want to calculate the cash flow. So let's think about this. We'll buy this property with the listing price. So what is the closing cost? So regularly, these closing costs depend on few other factors, and we can think about it might be something like $2,000, $2,500, or $3,000. So are you rehabbing the property? So it sometimes actually the property needs some sort of renovation. So let's uncheck this thing. Actually, check mark this one. So what will be the after repair value of this property? Maybe we are thinking if the property cost is $80,000 and closing cost is $3,000. So total is around $83,000. And what will be the after repair value? So we are thinking maybe we need $10,000 repair cost, and the after repair value might be 100,000. So this comes with your experience, because based on the property picture and also the condition, you will be able to some better idea how you can get some estimate, how we can actually estimate the renovation cost. So I already got the inspection report for this property. So if we go to the inspection report, we'll be able to see what are the main item which needs to be concerned about. So there are some few major concerns. There is actually the concrete block foundation walls, this some sort of crack there, and there is some active leaking from the water supply, and there are some potential safety hazard. You can actually go through the inspection report. And the deferred cost item seems like the roof appears to be the past its life expectancy. So you need to know actually how much money do you need actually to replace the whole roof, those kind of thing. So inspection report actually contains all the picture of the property. So you will get some idea what is the outside condition or inside condition of the property. So based on these information, actually, I figure out maybe we'll need around $10,000 to $15,000 to renovate this one. So these are some sort of art, not like exact science. So you will have some idea that if you go through the other listings, you will have some better idea what would be the after repair value. So if we think about that, actually we will buy with cash, then you will click this one. So we are thinking about we buy this property with loan, and if we get the residential loan, so current residential loan it is 3%, and if they charge 0% and it is 30 years. And we are assuming 20% of the parts, so we will only pay 20% of down payment. What is the gross monthly income? So to get the monthly income, if we go to the apartments.com, it shows that actually the 1 bed 1 bath, this unit was last time rented out for $550. And the other unit is actually 2 bed 1 bath, that is around $650. So we can safely assume that the total rental income would be $1,200, $650 and $550. So the property tax, if you go back to any of the site, it will tell you what is the property tax. So for these, if you go back to the Redfin site, or you can also know from these one. So it is seems like $1,976. We'll put it 1976. Insurance, normally the duplex cost around $1,000 for per year. If it is a single family house, normally it's $600 to $700. So for the repair and maintenance, there is a thumb rule you can use. Normally it takes 5% of the cost. The vacancy adjustment, it will be around 4 to 5%. I normally used to put 5%. The capital expenditure, I normally used to put 5%. And the management fee, if you the property to be managed by the property management company, they normally charge 10%. So for the case of duplex, the electricity is paid by the tenant, so you don't need to think about that one. But the water, sewer, that part you need to pay. So normally it's around $100 per month. There is no HOA fee, and maybe garbage would be $50. You can add some other expenses here, but if you don't have any other expenses, you can just leave it blank. You can click this finish analysis button. So it will give you some rough estimate, and also what would be your cash flow, and also what are the things or values we can get to analyze the property wisely. The BiggerPockets, the free account actually gives you around, I think, 4 to 5 analysis for free. But if you want to do unlimited analysis, you need to get the pro account in BiggerPockets. But it's always worth it to get the pro account. So it's generating this report. So there are a few trade-offs we can talk about rental property. So in always the rental property, if the neighborhood quality is very good, then the property price would be higher and your cash flow will be lower. And if the neighborhood quality is around B minus or C plus, so how we define A, B, and C type neighborhood? So the typical idea is that in the A type neighborhood, normally 90% of the home are owned by the homeowner and 10% are by the tenants. And in the C type neighborhood, it's totally opposite. That means 90% are the tenant and 10% are by the homeowners, and B is in the middle, around 50-50. So based on these information, if you go to A type property, then actually your cash flow will be very low, and mainly you are looking for appreciation. And in the C type neighborhood, your cash flow will be better, but appreciation would be lower, and there some sort of crime prone area most of the cases, and neighborhood quality would not be that much good. So BiggerPockets is taking a little bit more time to generating the report, so let's wait. It took a little bit longer than expected in BiggerPockets. After the report is generated, you'll be able to see the analysis. The monthly cash flow is $233 per month. Our income was $1,200 and expenses was $966. And you can actually update these values, the vacancy adjustment, management fees, and loan term. Based on these things, you will be able to see the other information. So as a whole, you can see this return part of this calculation. So our NOI, net operating income, is $6,000 per year. Our cash on cash return is 9.67%. And how much cash do we need to close this property? So total cash needed is $28,980 based on the 20% down payment. And if the down payment percentage increase, then the total cash will be increased. And you are getting monthly $233 per month. And cash on cash return is 9.67%, which is a decent return for our case. So if you have any question about this analysis, comment it in the video. Hit the like button if you learned something new. I will see you in the next one.